Have you ever wondered why real estate investment trusts are a good investment? Well, you're not alone. The world of investing can seem like a vast maze full of complex jargon and intimidating terminologies. But fear not, because today we're simplifying one of those terms: real estate investment trusts, or REITs. Think of REITs as a vehicle that allows individuals like you and me to invest in portfolios of large-scale properties. These could be anything from office buildings, shopping malls, hotels, to even healthcare facilities. The beauty of REITs is that they pool together the resources of multiple investors, allowing you to own a piece of these real estate portfolios without having to buy the properties outright. In essence, REITs democratize the real estate market, opening doors that were once only accessible to the wealthy. So, why should you consider REITs as a part of your investment strategy? Stay tuned as we delve into the top 5 reasons why investing in REITs can be a smart move for you. The first reason to consider investing in real estate investment trusts, or REITs, is the potential for a regular income stream. Now, you might be wondering, how do REITs provide this regular income? Well, it's all thanks to a rule set out by law. REITs are legally required to distribute at least 90% of their taxable income to shareholders annually. This distribution is done in the form of dividends. Think of dividends as a sort of thank you gift from the REIT to you, the investor, for putting your trust in them. And because they're required to give out a minimum of 90% of their taxable income, this thank you gift can be quite substantial. Now, this is where things get really interesting. Unlike other types of investments, where the income you receive might fluctuate wildly from year to year, the income you receive from REITs tends to be quite steady. This is because REITs generate their income from rents or mortgage interest, which are typically stable sources of income. Imagine owning a rental property. Each month, you receive a certain amount of money from your tenants in the form of rent. Now consider owning a share in a REIT. It's like owning a part of a huge portfolio of rental properties, and each month, you receive a portion of the rents collected from all those properties. And here's the best part: you get this regular income without having to deal with the hassle of being a landlord. You don't have to worry about finding tenants, maintaining the property, or dealing with any of the other headaches that come with owning rental property. All you have to do is sit back and watch the dividends roll in. Now, of course, like all investments, REITs come with their own set of risks. But the potential for a steady, regular income stream is a huge draw for many investors. This makes REITs an attractive option for investors seeking regular income. Scene script. Next up is diversification, another compelling reason to invest in REITs. Diversification. It's a term you've probably heard many times before, especially if you've been around the block in the investment world. But what does it really mean? In simple terms, diversification is the practice of spreading your investments around to reduce risk. It's like the old saying goes, don't put all your eggs in one basket. Now you might be wondering, how do REITs fit into this picture? Well, it's quite simple. REITs, or real estate investment trusts, allow you to invest in a variety of properties without having to buy them all individually. This means you can have a stake in a shopping mall in New York, a hotel in Paris, and an apartment complex in Tokyo, all without leaving your living room. But the benefits of diversification don't stop there. One of the key aspects of a well-diversified portfolio is the inclusion of assets that are not correlated with one another. This means that when one asset class is performing poorly, another might be thriving, balancing out your portfolio's overall performance. And here's where REITs truly shine. Typically, REITs are not correlated with other asset classes, so while the stock market may be having a rough day, your REIT investments might be performing well, helping to offset any losses. This lack of correlation provides an extra layer of protection for your portfolio, further reducing your risk. But let's not forget about the potential for increased returns. By investing in a variety of properties through REITs, you're opening yourself up to a world of opportunities. You're not just bound by the performance of one property or one market. Instead, you're tapping into the potential of multiple markets, each with their own unique dynamics and growth prospects. So when you add it all up, REITs offer a powerful tool for diversification. They provide an easy and efficient way to spread your investments across a wide range of properties and markets, reducing your risk and potentially increasing your returns. With REITs, you can diversify your portfolio, spreading your risk and potentially increasing your returns. The third reason to consider REITs is liquidity. Now, what do we mean by liquidity? In simple terms, liquidity refers to how easily an asset or security can be bought or sold without affecting its price. The more liquid the asset, the easier it is to sell, and vice versa. Traditional real estate investments are generally considered illiquid assets. That's because selling a property can take a considerable amount of time, sometimes weeks, months, or even longer. And that's not to mention the costs involved with inspections, repairs, agent commissions, and so forth. But when it comes to REITs, the story is quite different. REITs are publicly traded entities, just like stocks. This means they are bought and sold on major exchanges every single day. The beauty of this is that you can sell your REIT shares almost instantaneously whenever the market is open. There's no need to wait for a buyer or negotiate a sale price. You can sell your shares at the current market price and the transaction can be completed in seconds. So if you ever find yourself in a situation where you need to free up some cash quickly, REITs offer a level of liquidity that traditional real estate investments simply can't match. And this flexibility can be a real advantage for investors, especially in volatile market conditions. With REITs, you can easily buy and sell shares, just like stocks, providing you with greater flexibility. The fourth reason why you might want to invest in REITs is their potential as an inflation hedge. Now, you may be wondering, how exactly does that work? It's quite simple when you break it down. You see, one of the main sources of income for REITs is rent. Rent is a cost that tends to rise over time, often in line with inflation. This is because landlords typically adjust rent prices to account for inflation, ensuring they continue to receive a real return on their property investments. This rise in rent in turn leads to higher income for REITs. Now let's take a moment to connect the dots. Higher income for REITs usually translates into higher dividends for investors. So, if you're an investor in REITs and rents are increasing due to inflation, it's likely that your dividends will also increase. That's why we say REITs can act as a hedge against inflation. They offer the potential for your investment income to grow in line with or even outpace inflation. However, it's important to remember that while REITs have this potential, there's no guarantee. Like all investments, REITs come with their own set of risks, and it's crucial to do your research before diving in. Investing in REITs can offer protection against the eroding effects of inflation on your portfolio. This makes them an attractive option for those looking to maintain or even increase their purchasing power over time. Finally, the fifth reason to invest in real estate investment trusts, or REITs, is their accessibility. When we talk about accessibility, we're referring to the ability to participate in the real estate market without the need for substantial capital or expertise. In the traditional sense, real estate investing often involves a substantial amount of money, time, and knowledge. You need to have the capital to buy property, the time to manage it, and the knowledge to navigate the complex world of real estate transactions and property management. But with REITs, you don't need to worry about any of that. Think of REITs as a way to own real estate indirectly. These trusts own and usually operate a portfolio of real estate properties and mortgages. As an investor, you buy shares in the trust, much like you would buy shares in a company on the stock market. This means you're buying a piece of all the properties that the REIT owns, without having to buy, manage, or finance any properties yourself. What's more, you can buy and sell these shares easily, just like you would with stocks. This gives you a level of liquidity that's not usually associated with real estate investments, but probably the most significant aspect of REIT's accessibility is that they allow the everyday investor to participate in the real estate market. You don't need to be a millionaire to invest in REITs. You don't need a degree in real estate or years of experience in property management. All you need is a brokerage account and a little bit of money to buy your first shares. In essence, REITs have democratized real estate investing. They've made it possible for anyone to benefit from the potential profits of owning real estate without the traditional barriers to entry. REITs offer a way for everyday investors to benefit from real estate, a traditionally high-performing asset, without the need for substantial capital or expertise. So there you have it, 5 compelling reasons to consider investing in REITs. From providing a steady income stream, offering diversification opportunities, and ensuring liquidity, to acting as a hedge against inflation and offering easy accessibility, REITs truly pack a punch. As with any investment, it's essential to do your own research and consider your financial goals. But with these 5 reasons, it's clear that REITs could be a valuable addition to your portfolio.